Asia's been a difficult and varied place to be investing over the last few years. The bigger markets like China, India, Japan have been pretty poor performers over the last couple of years. More recently, they've started to do a little bit better. Now, we think the main driver for outperformance of these markets versus the world index, for example, is structural reform. Now, what we mean by structural reform is changes to those underlying economies for a number of reasons. In an economy like India, the reason why they want to change is to grow faster. And ultimately, if the economy is growing faster, the opportunity for corporates to increase their earnings potential, therefore increase their return on equities, and therefore to increase, if you like, multiple expansion is much greater. So we're positive on the potential for an economy like India with much talked about structural reform. For an economy like China, and to a lesser extent Japan, structural reform needs to go on there, if you like, to cement the recent gains that we've had. You know, China's had a phenomenal last 20 years. There's a lot of people saying that they've reached the limit with the current model and they need to change their growth model and then sort of reorientate the economy away from exports and fixed asset investments to the domestic sort of consumer. Our balanced funds have increased their equity weighting in Japan to an overweight position more recently. And the main real reason for that is because we believe that certainly in the short term, the outlook for earnings is very positive. Now, why is that? Is that due to a fundamental change in the structure of the Japanese economy or structural reform as such, or is it some other factor at play? And we think as it stands at the moment that the new Prime Minister Abe, who came in September, has come in with a new pro-business agenda. And part of that agenda is what they broadly call Abenomics, is to basically, they've eased monetary and fiscal policy, they've managed to get the yen substantially weaker. Now, if you're an exporter in Japan and your dollar-yen rate's just fallen by 15%, that's a huge advantage you've just got against your other Asian and global competitors. So the outlook for Japanese corporates is very positive. So that's one of the reasons. The other reasons are there is some talk of genuine structural reform in Japan. Now, we've been there before. Perhaps we will wait to see until it actually happens before we get too excited about it. But there are a number of measures that they're talking about, be they tax reform measures or entering a new free trade body, which is called the TPP, the Trans-Pacific Partnership. Now that could ultimately lead to a reformed domestic economy in Japan, which we haven't yet seen. And if that happens, then Japan can really be re-rated. Yeah, India has, after being a darling of the emerging market space for the last 15 years or so, the last two have been difficult. And you can trace India's problems back to corruption scandals in the telecom sector, which ultimately, in the sort of bigger scheme of things, led to a failure, if you like, in the interface between business and government. And so what we saw was a dramatic fall in investment by the business side of the equation, if you like, and we've seen growth rates fall quite considerably from where they were just 3 or 4 years ago, which we were talking about 8-9%. Down to 5 or 6%, which is a substantial reduction in growth for an economy like India. Is that going to continue? Well, we've seen some changes in the leadership of the Congress Party and the government. Slightly more reform-minded agenda has come out, and that's led to quite a dramatic re-rating in India in the very short term. Now, I think the market has recently done well, as I say, this re-rating we've seen. Perhaps it's got a little bit ahead of itself in the very short term. The growth hasn't yet kicked up to reflect those changes, but we think that will come through. So we think India, certainly on a medium to long-term basis, we're still very comfortable with the quality of the corporates and the story, the structural story that we see there. But yeah, we're positive on India. I think we still do like the story, but maybe in the very short term, it needs to consolidate a little bit. Yeah, China's a difficult market. We've been through a transition, a once in every decade transition. We've got a new leadership in place. They haven't formally taken over the reins of power yet. They were announced late last year of who they were, the new leadership. The way the system works is they actually take power next month. It's on the face of it not a very reform-minded leadership, although I think they perhaps will deliver more than currently the market's expecting. Now, the market over the last 3 to 4 months has done very well. We've seen more evidence of the economy sort of, if you like, bottoming out and starting to increase. Various indicators would indicate that economic activity is increasing. So the stock market has reflected that view to a certain extent. I think the big question for investors and us is it sustainable? How long is this current uplift going to be lasting, and ultimately what's China going to do about its growth problem going forward? Now, its growth problem, by that, what we mean by that is the days of double-digit growth are gone. That's just simply China can't afford. It's the world's second largest economy. It cannot afford to grow like it did in the past. The cost to China in the world is simply too great. The cost was highlighted literally last week, where you saw these pollution figures in Beijing, where literally going outside for 5 minutes was endangering your health by breathing the air. And that is an environmental cost of the growth we've seen. Now, China needs to shift its economy away from exports and away from fixed asset investment, reliance on those two main themes, towards more domestic consumption. And we need to see reforms in the economy for that to happen. We think they are happening. The market, as ever, is impatient, wants things to happen quickly. China will change in its own pace, but we think there will be change. So ultimately, we're still quite positive on the outlook for China in the short term. In the medium term, we need to see some more evidence of these changes and how that's going to impact the corporate world and everything else. Of course, there's geopolitical issues going on that need to be closely kept an eye on. But at the moment, we're still fairly positive on China, but with a watching brief.